Hello, a very good afternoon. You're watching Midcap Radar on CNBC-TV18. I'm Ekta Batra, with me Sonal Bhutra. Well, it's turning out to be a session where it is absolutely steady, no real complaints. We've managed to hold on to levels and in fact inching closer maybe towards that 18,000 mark for the Nifty, so up around close to 200 odd points for the Nifty, and for the Midcap index up close over 300 odd points at this point in time. Lot of broader market stocks buzzing around, so we'll get you a lot of that in the next 30 odd minutes. Hi, Sona.
Hey, Ekta, 18,000 is the next level that we are watching out for. But yes, as Ekta said, as steady as it gets, Nifty is at the day's high and there is no selling that we are seeing from the top. Let's see which way things go for now. We'll start the show with the top headlines and then we'll discuss all the individual stories. Market holds gains after a strong open. Midcaps largely in line with large peers. Auto, IT and pharma lead the charge while metals and energy lag.
Nykaa surges after revising the record date for its 1:5 bonus issue by a week to the 11th of November.
MRPL slides after windfall tax hurts its second quarter showing. The refiner reports a loss of nearly 1,800 crore rupees against a profit a quarter ago.
DCX Systems 500 crore IPO opens. The management is optimistic, tells CNBC-TV18, expects the margins to continue to expand from FY22 levels with an order book of around 2,600 crores.
Okay, all right, those are the top headlines. Well, the mid-cap side of things doing really well. We have the index in line with the benchmarks, up 1%. Couple of stocks in the broader markets which are at the day's high. You have these cement stocks, India Cements and Ambuja Cements. Both these stocks are at the day's high as we speak. Quarter two has been very weak for Ambuja Cements, so there is some recovery that we are seeing from there. That stock is up 3%. We also have Indian Hotels, which is higher in trade today, so that stock also is up 3%. Rain Industries, which has its earnings sometime this week, that one also is sitting with gains of 2.5%. Balrampur Chini, we just spoke to the management of Dwarike Sugar. He expects the second half of the year to be much better. Sugar stocks were under a lot of pressure on Friday, so some recovery is what we are seeing right now. But overall, if it is looking decent, but Ekta, we do have a corporate that we'll be talking to.
Yes, absolutely. We do have our first company on the show on Midcap Radar today. Compressor manufacturer Kirloskar Pneumatic. The company has delivered what is a healthy second quarter with an over twofold rise in profit even as raw material costs have risen. So Suhas Kulhatkar, who is the VP and CFO of the company, now joins in to discuss the Q2 performance. Hi, sir. Welcome to the show. You know, it's been a strong growth for you all. Revenue is up around 30% on a year-on-year basis and margins too have improved. Can you just tell us what were the key growth drivers this quarter in terms of sales? Which were the segments which led the growth higher? And how did you manage to achieve these margins despite raw material volatility that we've seen globally?
Hi, Ekta. Nice to be back on your show again. Through your channel, let me wish happy somewhat 2079 to all your viewers at the outset. Well, Kirloskar Pneumatic delivered 30%, as you correctly noticed, YOY growth in the sales. The quarter-on-quarter growth sales was about 8%. This was possible through a robust export sales because our export sales, as indicated in the during the last call, improved to almost 86 crores compared to about 12 crores in the first half of the previous year. This was a major contributor in the growth. Apart from, of course, about, I would say, 15% growth year on year in case of domestic sales, but export sales rose almost by 6 times. So this has contributed to the margins, number one. Number two, the pressures on the raw material which were felt during the fourth quarter of the last fiscal and the first quarter in the current quarter have to a large extent got eased out. So that has resulted in our margins improvement from, I would say, raw material consumption improvement to about 55% in the current quarter compared to 58% in the last quarter. So there was almost 3% saving in the raw material cost coming both out of the product mix as well as the reduction in the cost of the input material. So that helped us in getting our EBITDA numbers better. This is what we had anticipated and this is what I had projected during our last call. That we would be able to improve our margins in the coming quarters. And for the year, we will be close or surpass the last year's margins.
Okay, so you spoke about how exports have done well for you, and 86 crores in this quarter itself. You were working earlier when you had spoken to us, you said 20 to 25 crores is what you can do on a quarterly basis. So that's definitely a big beat there as well. So what is the export target for the year? Earlier you had indicated 100 crores. Clearly you will be surpassing that, but what is the absolute number?
So up till now, up to last year, we had been doing about 25 crores on an average, and that was not a great contributor to our total revenue earning. This year, we have done so far about 86 crores, and we are also having close to about 85 crores of orders in hand. As we speak, we have got another 50 odd crores order executed. So as of today, we are close to about 125, 130 crores of exports, which have already been achieved. We are looking at exports close to about 150 odd crores during this year. That will be a significant jump from 25 crores to 150 crores. So 6 times rise, as we demonstrated in the first half. We'll be able to show the similar rise for the entire year as well.
Okay. Which markets in the export space are driving this kind of growth, sir?
Look, KPCL is essentially addressing the oil and gas market. We are more, our business is more concentrated for the oil and gas sector. And most of our business revenues, whether in domestic market or the export market, has come from the oil and gas sector. This is particularly in the Middle East. And most of the business that we have achieved during this quarter, as well as the
can you give us
quarter.
the numbers? Can you give us the numbers? How much is being driven by oil and gas? How much is probably being driven by the MENA region? And what is your guidance on both these two factors?
I would say out of 85 crores, about 86 crores what we have achieved, close to almost 80 crores have come from MENA region. And if you have to look at the total revenue composition in the oil and gas sector, just allow me to just get the numbers right.
We can
It should be it should be in the range of about what I can say.
We can get back to that. Yes. We can get back to that. I'm assuming that that's going to be majority of your sales within that 80, 85.
So about 65% of the sales will come from the oil and gas sector.
Oh, okay. Sonar, go ahead.
Mr. Kulhatkar, I just want to confirm this 86 crore of export number that you're talking about, it is in the first half or second quarter?
Equal in both the quarters.
So you mean to
say, in the last call, 43 crores in the first quarter, 42 crores in the second quarter. So 86 crores in the first half.
Got it. 86 crores is the first half. All right. So you had guided for a 20% growth target for FY23. You are sitting on a base of around 570 crores in the first half itself. That compares with around 1,000 crores that you did last year. You will be surpassing that guidance then in that case?
We will be having 20% growth for sure. That is where we are committed to. If you look at the order board or order booking, as you call it, last year at the same time, we had about 1,070 crores orders in hand. Today, we are sitting on 1,200 crores orders in hand. So that definitely will help us in getting better numbers. Our guidance was of 20% growth, and we will be able to achieve that, if not surpass.
Okay. Can you articulate for us what the domestic market is doing like in terms of a growth rate? What are the key drivers there? Would that also be the oil and gas segment, which is primarily driving growth? And what is your guidance on domestic growth?
In domestic market, oil and gas, you need to look at the oil and gas sector in a perspective, because oil and gas sector is divided into upstream, downstream, midstream, and the distribution market. Upstream market has been doing well. Distribution market, in terms of CNG, where we are the major player, is relatively going little slow. As we understand, there has been some relaxations given by PNGRB to the gas companies for the installation of the gas stations, and their MWP, there has been some concessions in NWP. So compared to the previous year, the distribution side is going little low. However, if you look at 8th and 9th and 10th, 9th and 10th and 11th rounds of city gas distribution, there is a guided numbers that we would be able to see for the execution in the coming years.
Okay.
So that is something that will happen in the next year. Rest of the growth has come from the domestic sector.
Okay.
Second, another aspect that I would like to highlight is that last year, COVID, to support the COVID, to battle the COVID pandemic, we had a lot of demand for the oxygen compressors. Obviously, that sort of a demand is not there during the current year. Despite that, we have been able to show a growth in the domestic market. And we believe that this growth will continue in the coming half as well.
All right, sir. Thanks a lot for joining us and taking us through all those questions, all the outlook that you have for the export and the domestic business going ahead. Well, that's the word coming in from Kirloskar Pneumatic. They stick to their 20% growth guidance and also expect margins in FY23 to be better than FY22. That's about the company, but back to our segment, Midcaps Mover, we have Vivek to take us through the mid-caps that are moving around in trade today. Vivek?
Well, good afternoon. Quite a few mid-cap companies today doing very well in the session. In fact, we're talking about a couple of capital goods names also, especially if you're talking about Blue Star. Now, this particular stock clearly outperforming in that particular space. Despite weak numbers from Havells, this particular stock has continued its uptrend today, sitting at a fresh 52-week high. Torrent Pharma, after the results as well as some of the US FDA related news, continues to move higher, and this particular stock too today sitting at a fresh 52-week high. Two mid-cap banks, this particular month, both of these banks, both Indian Bank and Karur Vysya Bank, have actually gained over 25% in the month of October, and today, at a fresh 52-week high, moving ahead on very strong volumes as well. Going forward, another pocket today that's doing quite well. Retail stocks, both AB Fashion Retail, today at a fresh 52-week high. Trend today on very strong volumes. Volumes are at multi-day average today. In fact, the stock saw a very sharp spike in the opening, and it continues its gains. So Trent is another stock to keep an eye out for. On the other hand, if you're talking about some of the losers, Chemplast MR today at a fresh 52-week low, moving lower on strong volumes. Delivery after the weak Q2 update continues its fall. Satin Credit Care reacts to slightly weakish results, and Fine Organics today on very strong volumes is down almost over 8%. So another stock to keep an eye out for in case any development does happen.
Okay, well, thanks, Vivek, for that. Lot of buzzing stocks within the broader markets. Then keep your eye out on that. We're going to take a short break, but on the other side, Supreme Industries will join in to detail their Q.
Welcome back. You're still tuned into Midcap Radar. Well, Supreme Industries is the company on our radar, has reported a weak set of numbers for the second quarter. This is largely led by a decline in PVC resin prices, which has led to a fall in margins, largely because of inventory losses. Let's discuss this and the outlook going forward. We have with us Mr. MP Tapadia, who's the MD of the company. Mr. Tapadia, good afternoon. Thanks a lot for joining us. It's always a pleasure speaking with you. Well, as we can see, it is a sharp margin decline this time around. Can you tell us how much have the PVC resin prices fallen by in quarter 2? And now in quarter 3, have you seen them getting back, seeing some recovery? Is inventory loss a thing which will gradually reduce for the company and the industry?
You see, in the first half, the PVC resin prices dropped from 140 rupees to 90 rupees, a drop of 50 rupees a kilo. In the month of October, they further dropped by 7 rupees a kilo. We believe the prices now have come close to bottom, and our experience says when prices drop too fast and too much, then after a certain period, the prices are bound to jack up. Because so many marginal producers may not be able to operate the plant at such a low price. So we believe that most of the inventory loss has already been factored in the working of first half. Things should look better going forward, definitely in the last quarter.
Okay. So, your margins came down all the way to 7% versus 16.1%. And this is versus 12% in the previous quarter as well. Now, based on the fact that you think that most of your inventory losses are factored in, PVC prices have probably hit a bottom now. What is your guidance in terms of margins? Where do you expect it to probably settle? Your earlier guidance for FY23 was 15 to 16%. Are you in a position to maintain that?
We believe that for the full year, our margin will be between 12% to 12.5%.
So you don't expect it to be 15 to 16%, which you had guided for earlier. You expect your margins to come to around, to average between 12 to 12.5%.
We are right.
Okay.
Okay. Mr. Tapadia, in your press release, you have also mentioned that because of this steep fall in PVC resin prices, volumes could improve because affordability will be better. In the first half, you've done volume growth of 27%. What will the entire year look like in terms of a volume growth for the company?
For the company, we anticipate a volume growth of minimum 20%. And for our plastic piping division, it will be excess of 25%.
Okay.
Okay, all right. So that's your volume guidance. Sir, you know, you're a very cash-rich company. You have a cash surplus of around 493 odd crores. You're debt-free as well. Do you think that it's time to probably look at growth via maybe inorganic means? And if you could guide us on whether or not you are probably considering that?
We are open to inorganic growth. If there is a right proposal, we are open to inorganic growth.
Okay, but anything that you would probably want to guide investors for, and maybe not only inorganic growth, any kind of utilization of cash which you have on books which you've considered maybe rewarding shareholders as well?
And first, we have got large investment program.
Okay.
Our investment program for this year was 700 crore. And we stay committed to have a total investment, including carry forward of 280 crore rupees, to commit an investment of 700 crore this year. Going forward also, we have got a large expansion plan, so we will continue investing more and more money in our business.
Okay.
However, if we get a good proposal to have an inorganic growth, we are open for inorganic growth plan also.
Okay, you have identified any of the targets that you can actually look at, anything in the works?
Not at this moment.
Okay. All right. Can you tell us more about the capacity expansions? One of it is going to come on stream in December. There are more planned, as you just pointed out. In this year itself, how much will the new capacity add to your overall revenues? And you had guided for revenues to, come in at 9,000 crore rupees. In first half, you are sitting on revenues of 4,200 crore rupees. Will you be able to achieve that guidance of 9,000 crore rupees of revenues?
We are very confident that in spite of fall in the prices of polymer, we will achieve a turnover around 9,000 crore rupees this year.
And how much will the new capacities add to in the revenue guidance that you just told us?
New capacity will be 80,000 ton for the year, but some plants started in the month of July, some are going to start in November, some are starting in December. So for the full year, we may not get full benefit of the expansion, but marginally get benefit of the expansion also.
Okay. Y'all did have an order win or a letter of intent which you've received with regards to the Jal Jeevan mission, which is worth around 480 odd crores. When does execution start on that? Any more government orders in the pipeline that we could hear from?
We are told by the government that they will start buying from the month of November.
And when would it show on your P&L, sir?
Maybe between a period of 24 months.
Okay, and what is the pipeline of projects that you're bidding for from the government?
Around 20 crore rupees every month, starting from November this year.
Okay, 20 crore. And that new capacity addition, you said it will add some figure. Is it around 200 to 250 crore rupees in this year itself?
Sorry, say it again.
The new capacity, how much will add to your revenues? If you can give us a ballpark figure, because they will be at different capacity utilization levels, but an absolute number here?
As we told you, in plastic piping, we will grow by 25%. As the new capacity fully will get advantage only for 4 months and 80,000 ton per year.
Yeah.
So around 30,000 ton production extra we'll get this year from the new capacity.
Oh.
Okay. All right, so we're going to leave it on that note. Thanks very much for joining in this afternoon and talking to us. So that's Supreme Industries. The stock is up around 1.5%. It is reacting well to its numbers, but the company has scaled down its margin guidance to 12 to 12.5% odd. Volume growth still intact at around 20 odd %. We need to take a short break, but before we do that, here's some great news for investors. You can now track the US market action. Welcome back. Well, let's focus on our segment Mid-Cap Spotlight on the show. Sonal, you're discussing MRPL. Tell us more.
Yes, very weak set of numbers, and that is something we expected after Chennai Petro's week showing this time around. Revenues declined to 24,608 crores for the company. This is on a quarter-on-quarter basis. It is not only the revenues, the company saw a big EBITDA loss as well, came in at 2,000 crore rupees versus a positive EBITDA number of 4,700 crore rupees, and lost this time around at 1,800 crore rupees, which compares with a profit of 2,700 crore rupees. Now, of course, couple of things. Singapore GRMs, they fell to levels of $3 per barrel from peak of $31 per barrel, which impacted standalone refiners as well. Additionally, there was an impact of windfall taxes to the tune of 1,026 crore rupees, and there was an impact of domestic refinery transfer price, which is a price at which the standalone refineries supply products to the oil marketing companies. There, the impact was 1,163 crore rupees. So all this led to basically a GRM coming into the negative for MRPL at $4.46 per barrel, which compares with a positive GRM of $2.26 per barrel. So a big decline in GRMs, and additional hit came in from the increased RTP, that is the refinery transfer price and windfall taxes, and that's why the stock also low by 4% in trade today.
Okay, all right, Sonal. Thanks very much for that. So that's MRPL, the stock down around 4%. But that's all the time that we have on Midcap Radar. Stay tuned. Your stocks once we're back.